Welcome back to Fast Money. Check out the banks posting some major gains today. The pop coming after the Fed said it would allow the group to resume buybacks. But how will financials fare in the new year? Chris Verrone of Strategas joins us now to help sort that out with the charts. Chris, take it away.
Hi, Melissa. Yeah, I think today was a really interesting day. If you look at the last several weeks, a lot of macro uncertainties, yet the banks have quietly acted really well. Today was an example of that. The bank index, the S&P, broke out. I think it's very meaningful. And then I think most importantly, when you look at the banks relative to the market, they have really started to turn, really reversing a 2 or 3 year downtrend. The leadership we're getting from the banks here, I think, is a very good sign for what the group can give you next year. I think a big part of this call is rates. And that's another thing about today that was really just so remarkable is how resilient 10-year yields have been. They traded them down to about 87 or 88 basis points this morning. They held, reversed higher to 94, 95 bips. That means the curve is steepening. Steeper curve is a good environment for banks. And I really wonder if we're setting up for some type of a pair trade in 21 where you want to be long banks and short tech. And really, that's the next chart here. This is your P&L if you're long banks and short tech. And this is, again, started to turn over the last number of weeks. We're forming a base. And I think rates up is probably supportive for this idea as well. So what names do we want to own in this group? You can't talk about the banks and not talk about the biggest and the best chart in the group, and that's JP Morgan, another stock that really has broken out over the last several days. I do think this will give a run back to the old highs somewhere in the 140, 145 neighborhood. But again, this for us is about the turn in relative performance versus the broader market. This is reemerging as a leader after, frankly, a pretty difficult last 2 or 3 years. Look at some of the brokers. We have some breakouts here as well. I think Goldman Sachs, very quietly, Goldman has started to outperform here over the last several weeks. And that's a major, major change in character for this stock. It's frankly been 12 or 13 years since Goldman last worked as a leadership name. Nice relative breakout, a nice absolute breakout for Goldman as well. But our favorite name in the group, our favorite name for 21, really in any sector, is Morgan Stanley. No one has made any money in Morgan Stanley in 20 years. That is changing here in a very, very big way. This is a huge breakout over the last several weeks here. I think any weakness into the new year should be bought. This is one of our favorite ideas. I think the banks in general are starting to assert themselves. And what we have said is a broad market. And the banks getting involved, I think, is reflective of that.
Chris, is Morgan Stanley one of your best ideas stock-wise overall or within the banking sector? Just curious.
Well, it's one of our favorite ideas in any sector, in any group, in any geography. This is one of the best charts in the market.
Wow. Chris, thank you. Chris Verrone of Strategas. Guy Adami, that is some endorsement by Chris.
It is. And actually, I think Dan spoke to this a while back, saying Morgan Stanley actually looks like one of the best charts that he's seen. So, Chris and Dan are singing the same tune, which is great. I'll go back and look at Citi and say that, I think we've done a really good job with that one. Go back to October when it was trading $42 a share, 59% of tangible book. And I think we outlined a really cogent argument why it should be trading $61.20. And that's based on it trading back to 85% of book and now of tangible book. Now look at where it closed today, 61.20. So I think it's a reasonable place to be taking money off the table. I think banks can go higher, but just look at the run that it's had. And you've seen sort of fits and starts in Citi. So Citi specifically, if you've enjoyed this run, I'd be paring down some of the gains.
Long banks, short tech. Dan, what do you think?
Yeah, listen, I've been on that train largely because the charts look that way, and Verrone's come on numerous times, and I've agreed with it, but I've also agreed with Tim and Mills and Guy, who are saying that this is the best reopening trade out there, and it's going to be a multi-year thing, not like the V reversals we've seen in some of those hard hit names in the industrials and the transports, that sort of thing. So I like them here.
All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.